Good morning, everybody. It's Tuesday, June 18th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at July corn up 3 1/4 at 447. July soybeans were up 4 1/2 at 1162 1/4, and July Chicago wheat was down 3 1/2 at 588. Yesterday's crop progress and conditions report showed corn 72% good to excellent. That was versus 74% for the prior week. Soybeans came back 70% good to excellent. That was also down 2 points from 72%. Winter wheat harvest projected 27% complete. That was above 12% from the previous week and 14% for the average. On the conditions side, winter wheat conditions improved 2% to 49% in the good to excellent category. And spring wheat was up 4% in the good to excellent category at 76%. We had May retail sales out this morning. Came back slightly weaker than expected, up 0.1%. Still better than the revised number of 2.2% lower in April. So a little bit better data there on the retail sector. And yesterday's NOPA crush number was higher than expected at 183.625 million bushels. They were looking for a number closer to 178. So good morning, guys. Looking at overnight weather, we were talking before the show. It appears that the Euro and the GFS became in a little bit more agreement for maybe a wetter pattern and out forward in the extended forecast. Still appears to be pretty warm. Dustin, maybe a few thoughts to start the morning here, and then we'll throw it around the room.
Yeah, thanks, Dan. Good morning, everyone. So yesterday, crop progress had Illinois corn ratings down to 65%. They're down 9% from the prior week. And we got the updated Euro forecast that comes in every morning in the morning, once a day, and once again lowered some of that moisture in the 2-week outlook and kept the heat in. So just something to keep in mind as we go in the next couple of weeks. If this forecast holds, yes, it does look pretty good for Iowa and Northern Plains. But as you head east and south, it's going to be hot and dry. Illinois is looking at 51% of normal rainfall for that next 2-week pattern. And then the average temperature is going to be well above normal, almost 8 degrees above normal, 7.8 on average for the next 2 weeks. So if we've already seen this big of a reduction in those crop ratings, I think that that's still going to, manifest and be felt by market participants in the East as we go into that time frame. I will say, that's generally something that kind of spurs some fears, especially as you're experiencing it real time. We do have first notice day to consider, though, as well. That's kind of the counter argument of what could be friendly. There are still a lot of bushels in the East that need to be marketed and sold, as we understand it, as we head in the next 2 weeks. And the expiration of that July corn contract requires those bushels to be sold. So last thing to kind of keep in mind going into this time frame.
Ben, any thoughts over on your side this morning? You're muted there, Ben.
There is an abundance of corn still in the East. It's going to have to be moved. I think that we're probably looking at a reversal of fortunes the way the weather is looking out right now, with it being not great over here with a lot of heat. And I think that, looking forward, this is an area that typically can be a corn deficit area, especially in certain regions here. So not getting the cart before the horse, but I do think that maybe that's something to start thinking about from a basis perspective. And incorporating that into how your marketing plan is going to work for next year. So, I feel like we've been in a situation where it's been very difficult to look past the old crop abundance in general across the country. And I think we're getting in a transitional period where the potential is here for people to have to wake up that the forward look might not be as abundant. And certainly we're always vulnerable to changes in weather, and they've been moving a lot the last 3 or 4 days. But I think that we're getting to a point here on the calendar where a little more scrutiny may be put on where we're actually at. the Illinois drop overnight, pretty significant. I don't see anything in the short term that's going to improve that before next Monday. So you kind of have a push and pull here of old and new, and it's coming to a head over the next 10 days. So.
And Justin, anything to add to that here this morning?
No, I mean, I think we've been kind of talking about it. I think, a lot of factors going in here. First notice day, options expiration. A lot of people talking about seasonalities. You tend to top, mid-June, a lot of years. So a lot of people showing the 5-year, 10-year, 20-year seasonality. And, that is true. It's just the years that don't do it, there's a reason. And, this year I curious if we've had that big rally or how much weather premium we have. That's the $1 million question. I think there's a lot of sub $4 corn bears out there, and they're kind of in charge right now going into first notice day. The question is going to be how much do farmers feel like they have to sell, or what happens over the next 2 weeks. We talked about this a lot. So I'm not saying that there's a bull market or anything, but I think we may be undervaluing corn. We've sold record amount by 30% to Mexico this year. We find demand on every break. Week after week, we have over 1 million tons of sales. So it's not like we've done any rationing or anything like that. If anything, we've picked up demand. Crush demand was good for beans again yesterday. So looks like the USDA crush number is probably going to be a little too low. Got 4 more crushing plants coming on by the end of Q4. So I think demand's pretty positive. Question is obviously supply, and we're starting out with a really high number. We're starting off with a really high crop conditions number. So that'll be easy to have, more cuts, I think, in the next couple of weeks, like Dustin said, especially coming from such a high point. And even if you look at the state by state breakdowns, really all the major states, kind of were flatter. Iowa was up 1, but all the other 5 of the top big states were down, 2, 3, 9%. New Mexico was up 19%. So, I think maybe the conditions may be slipping a little further this week than we think too. So, nothing, we're choppy. It's a tough market. We're kind of hovering below cost of production for a lot of producers and making a lot of growers really anxious about kind of feeling that they have to sell something here. So it's going to be a really tough and emotional, I think, 2 to 4 weeks, in my opinion, on a marketing standpoint.
Yeah. And we're going to pause here in the middle of the week, no trade tomorrow until, tomorrow night. And you just, with these weather models flipping, things could get pretty antsy in the markets, when you're pausing and restarting and, coming into expiration and things like that. There's just a lot going on.
Yeah. 100%.
Nothing else on that, guys. Ryland, maybe a few thoughts here this morning on cattle. Saw a little bit of positivity here early yesterday. But what's your thoughts as we keep rolling around here?
Yeah, kind of some mixed action. Still haven't really seen any cash trade here, but the beef still grinding higher. This is right around where we made our seasonal top last year in beef. So I think that's in the back of everybody's mind right now. And futures have been pretty strong here. So I think, we made a new high for the move yesterday, but just kind of faltering. So I think everybody just wants to see what cash actually shapes up to be. We know that just overall, like, there's this tight supply environment in front of us, but on the other hand, we've really kind of cut the kills back. So, it just feels like there's a lot of caution here. There's a lot of things producers can do to kind of protect themselves, I think. Plus, we got a cattle on feed report on Friday. I don't think anybody's expecting too big of fireworks from this one, but we are just kind of rallying into this report. So, I think there's going to be a little bit of caution towards the end of the week on that front. Open interest was up another 1,800 contracts overnight. So I think we are kind of seeing a little bit more active hedging coming to fruition here, just with the price action yesterday, and maybe even some more buying here, just kind of on the speculative side of the market. But hogs have been kind of star of the show. It looks like we kind of bottomed here and ran right into the 20-day moving average. So sadly, cutout was a little bit lower, and around this time was when we typically peak in the primals. So we'll see if that still just kind of drags us down. We'd love to see some actual follow through, but open interest was still down another 2,200 contracts. So funds are still probably getting out of their getting out of their longs here. They only have 6,000 left, and if they want to press the short side of the market, I'd expect open interest to start to kind of accelerate here if they're really going to start to add to some short positions. So that's kind of what we're going to be following for right now, and just looking for maybe some follow through here, hopefully, so you can get a little bit better of a hedging opportunity at this time.
Sure. No, and we'll we'll take a look at some cattle on feed estimates there on Thursday's show. We'll have those out usually on Wednesdays, but like I said, we'll be closed
For
tomorrow. Sure. So we'll take a look at that on Thursday. Just to reiterate, there is a normal close here today. The markets will pause and then we'll reopen at 7:00 Central on Wednesday evening. Just so everybody's aware, if you check your quotes and they're not working, that's what's going on. And then the War Room, we will be back Thursday morning at 8:15 Central Time. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central. I hope everybody has a great day, and we look forward to talking to you Thursday.
Thanks, Dan.